Tesla takes the top position when it comes to EV production, and it's maintained this spot for many years. However, some new EV companies are fast growing out of their shells, and may eventually become strong competition for Tesla in the future. Hey everyone, welcome back to Everything Tesla Stock. American EV maker Rivian and German automotive brand Mercedes-Benz have recently announced a partnership to make large battery electric vans for both companies through a new joint venture in Europe. According to these car companies, the partnership's aimed at the launch of two electric vans, one based on Mercedes' new electric van architecture and the other on Rivian's forthcoming second-generation light van platform. Reacting to this, Wedbush analyst Dan Ives had shared some of his thoughts on the possible effects of this partnership on Tesla. According to him, this is what the Rivian Mercedes-Benz electric van partnership means for Tesla's stock price. Details to come in this video, but before we get going, if you like this type of content, don't forget to hit the like button and subscribe, and turn on the notification bell to keep up to date on everything going on with Tesla. Danny Ives is the managing director and senior equity analyst at Wedbush Securities. He's also a massive Tesla bull, constantly sharing his own opinion on why Tesla is going to become a huge car company in the coming years. According to Ives, Tesla's profitability is a game changer for the automaker, and its car demand is likely to increase in the future too. However, Rivian is a new player in the scene, and it's announced a major partnership with one of the biggest automotive brands in the world. This could possibly affect Tesla's stock price in a way. What does this partnership mean for Tesla and its stock though? Keep watching to find out. First, it could mean that Tesla's market shares may be shrinking a little bit. Since this is a joint project between two famous car brands, we could expect something great, enough to compete with Tesla's products in the EV market. According to both companies, the target of this partnership is to build an all-new electric car-only production facility leveraging an existing Mercedes-Benz site in Central or Eastern Europe. The two companies will jointly invest in and run a Mercedes-Benz factory in these locations, according to the terms of the Memorandum of Agreement. Vans from both firms will be made in this factory, and production set to start in a few years. Dan Ives believes that this is a major step forwards towards the European strategy, with a key partnership such as Mercedes. He also noted that Rivian is a unique window of opportunity to go after the European commercial in 2023 and beyond. The car company now produces and sells 4 battery electric vans: the e-Vito panel van, the e-Sprinter, the e-Vito Tourer, and the EVQ. And in 2021, it sold 334,000 vehicles, including more than 9,000 electric vehicles. Mercedes-Benz Vans CEO Matthias Geisen said in a recent statement that the company is sharing investments and technology with Rivian because they share the same strategic ambition, which is to accelerate the electrification of the van market with sustainable and superior products for its customers. Although the two firms have not stated if their joint venture will be equally owned, Rivian and Mercedes-Benz have both agreed to collaborate on cost-cutting measures. In addition to electric vans, which are mostly used for commercial purposes, the two automakers also produce electric vehicles for passengers. Since Tesla is also an EV maker, there's a high chance of its market shares dropping below the release of the new electric vehicles proposed by Rivian and Mercedes-Benz. While these companies may not be as savvy in EV production as Tesla, there's no reason they can't expand their collaboration to this area, which is now dominated by Tesla. Rivian produced 4,401 cars in the second quarter, a 72% increase over the previous. The company revealed that it is on schedule to fulfill its 2022 production goal of 25,000 electric vehicles, which is half of its previous projection of 50,000. Although the company is making efforts to ramp up production, it is still struggling to meet up with expectations. The production ramp-up has been bumpy for the carmaker, and it has been particularly affected by the industry-wide supply chain challenges, mainly because it's yet to establish strong connections with suppliers. Rivian has previously anticipated shipping 50,000 vehicles this year, but it downsized that goal to 25,000 vehicles back in March due to supply chain issues. Only roughly 9,000 vehicles have been produced as of June 30th, although it anticipates the development of its Illinois plant to increase annual capacity to 200,000 vehicles next year, and the facility still currently has an annual production capacity of 150,000 automobiles. On the other hand though, Tesla is way past this margin in both car production and delivery. Tesla had a massive increase in its yearly deliveries, from 22,477 in 2013 to 936,172 vehicles in 2021. The automaker's operations in California, Texas, Germany, and China have an annual capacity of more than 1.9 million vehicles. Also, Tesla recorded $11.8 billion in revenue in 2017, which increased at a compound annual growth rate of 46% to $53.8 billion in 2021. Even though Rivian intends to open its second factory in Georgia in 2024 and expects its yearly manufacturing capacity to reach 600,000 vehicles after this, there is no fixed timeline yet, and as a result, Rivian will most likely be far smaller than Tesla by the end of the decade. Rivian may find it difficult to expand as quickly as Tesla for two main reasons. Firstly, compared to the time of Tesla's spectacular rise, the EV industry is far more crowded now. Rivian still has to contend with other electric vehicle manufacturers like Stellantis, formerly known as Fiat Chrysler, and smaller electric delivery vehicle manufacturers like Canoo, which recently received a sizable order from Walmart, in addition to Tesla's Model X, an upcoming Cybertruck model, and further robovans. Second, substantial government aid, enticing credit terms, and tax cuts have all helped to offset a lot of Tesla's early losses. However, Rivian and other smaller EV manufacturers have a hard time securing the same advantages. For the foreseeable future, analysts predict that Rivian will continue to lose billions of dollars annually. Hence, it may run out of money before effectively ramping up production. Likewise, although Dan Ives stated that Rivian's production story will be under the bright spotlight over the coming quarters, he did, however, add that the company still struggles with supply headwinds, which continue to challenge its ability to put out vehicles. Also, despite giving an outperforming rating and raising its price target for Rivian shares from $40 to $45, Ives still predicts that Tesla shares are going to eventually rise to $400. There are two major challenges that the car industry must deal with, at least temporarily. One is the disruption of the supply chain caused by the pandemic, which has compelled vehicle manufacturers to temporarily shut down services and factories due to lockdowns and other limitations. Also, the invasion of Ukraine by Russia in February 2022 is one factor driving up raw material prices. Nickel, cobalt, and other raw materials for EVs have all increased in price, since these nations are important sources of these essential metals, and this has consequently led to an increased cost of producing cars. According to Alex Partners, a financial advisor and consulting firm, the average cost of raw materials for a single EV has risen by about 144% in just 2 years, reaching $8,255 as of late May. These expenses totaled $3,381 as of March of 2020. The consulting firm revealed that the average electric vehicle's development costs have gone up by around $2,000 over the last 2 years. These problems have severely hampered the attempts of car companies to venture into the EV industry. However, despite these market factors, Tesla has successfully pushed through all the challenges whilst increasing its car production and delivery. This is something Rivian is going to take years of constant effort to accomplish. Meanwhile, even though Tesla is far ahead of this car company, some analysts like CFRA research analyst Garrett Nelson are cautiously bullish about the long-term implications of Rivian's deal with Mercedes-Benz. He said, Rivian's MOU with Mercedes is positive, although it does little to change the company's near-term prospects and cash burn rates, which are of great concern to investors, particularly with a handful of upstart EV companies having either recently declared bankruptcy or warning of liquidity issues. Also, some analysts expect Rivian's revenue to soar from $55 million in 2021 to $12.4 billion in 2024 if it maintains its existing production plans and ramps up production over the next 4 years. Although far less than Tesla, Rivian is performing much better than many of its rival electric vehicle manufacturers like Canoo and Faraday Future Intelligent Electric, neither of which have produced a single vehicle yet. But Rivian hasn't demonstrated that it's the next Tesla. It's going to take several years to get to that point. Tesla's currently trading at 10 times this year's sales, and there are still several upcoming projects that are yet to hit the market. Even if there is a possibility of Rivian coming close to Tesla, it can only be idealized as a scenario in which Rivian experiences nothing but success. What do you think about Danny Ives' analysis of the Rivian and Mercedes-Benz partnership? Is it going to affect Tesla's shares? Let us know down below. And If you'd like to know what Tesla's been up to in the last few days, go ahead and click on this video on your screen. See you there.